From Daily Forex, this is Chris taking a look at the US dollar against the Canadian dollar. The US dollar initially rallied against the Canadian dollar during the trading session on Friday as employment numbers came out for both countries. Both countries came out with a mixed bag of numbers, with the Canadians coming out much hotter than anticipated as far as jobs added, and the unemployment rate coming in at 6.6 instead of 6.8%. So, with that being said, the Canadian dollar has picked up a little bit of strength, mainly due to the fact that the United States added 143,000 jobs in the previous month, but was expected to add 169,000. However, the unemployment rate is down at 4% instead of the 4.1% as expected. So a little bit of a mixed bag. At the end of the day, though, I think a lot of this comes down to tariffs or the fact that there aren't any tariffs, and that may have thrown the Canadian dollar a little bit of a lifeline. That being said, I believe that somewhere between 1.43 and 1.42, there is going to be a significant amount of support. I am looking for a bounce that I can start buying. Fundamentally speaking and structurally speaking, I think it makes a lot of sense that the US dollar continues to strengthen against the Canadian dollar, especially as the Bank of Canada has found itself in a position of cutting rates, while the Federal Reserve, with today's internal numbers adding more pressure, probably has to stay put for the rest of the year. At least that's what the thinking is today. So if that's going to be the case, that should continue to help the US dollar against most currencies, and especially the Canadian dollar, which at this point in time, Canada doesn't even really have a functioning government. So all things being equal, it makes more sense for money to flow into the United States than it does Canada.